Two important questions I ask people before they buy a stock is one, what are you actually buying and why are you actually buying? And to be honest, most people don't usually have answers to the first question. And the second question, most times, the answers are always I want to buy at a low price so I can sell at a higher price, which is actually very fine. But that right there is the reason why most beginners panic because you are focused on price. You are watching numbers go up and down, and when the number drops, you feel fear. When the number rises, you feel excited. But the truth is that when you buy a stock, you are not buying a number. You are buying ownership in a real business. And if you don't understand this, you will always invest emotionally. So today I'm going to try my best to change how you see investing in the stock market. So number one, what are you actually buying? So before we talk about what price mean and charts, let's talk about what a business really is. Because you are buying a business. So a business has customers, a business has products and services, a business has revenue, expenses, employees, assets, debts, and profits. And the main purpose of any business anywhere in the world is to make money, to make profits. So now let's use a real example. So imagine you buy shares in MTN Nigeria. What are you actually buying? So you are buying a piece of MTN's data revenue. You are buying a piece of their call revenue. You are buying a piece of their mobile money income. You are buying a piece of their infrastructure. You are buying a piece of their plant and machinery. You are buying a piece of their profits. So even if it is a tiny portion that you are buying, you are still legally a part owner of MTN for as long as you own a share with MTN. So you are not a spectator and you're not a gambler. You are an owner. And when you truly understand this, when you truly understand what it means, it changes everything for you. So I want to share a powerful insight I learned from one of the greatest investors in history, Warren Buffett. You must have heard his name. So Warren Buffett once said that when people will be better off if they say, I bought a business today, instead of saying, I bought a stock today. So this is just not a word play, but it's a complete mindset shift. So it shifts your thinking, shifts the way you think about the stock market. Because when you say, I bought a stock, it sounds like you are trading. But when you say, I bought a business, it forces you to think differently. So you start asking important questions. You start asking better questions. You stop reacting emotionally to prices. You start thinking long term. And this is the difference between investing and gambling. So now, how do you think like a business owner? That's the next thing I want to talk about. So let me give you a relatable example. So imagine you and four other of your friends open a small bakery, and each of you contributes 1 million naira to that bakery, and the bakery makes 500,000 naira profits per year. So your share of that profit is 100,000 naira. So imagine one day someone comes to you and say they want to buy your 20% share for 800,000 naira. Do you immediately panic? No, you ask questions like, is the bakery growing? Are profits increasing? Is the location of the bakery good? And what is the long-term potential of the bakery? But I've noticed that in the stock market, people don't ask this question. Someone can see a stock price fall from 250 naira to 240 naira, for example, and immediately they start thinking that there's something wrong with the market or there's something wrong with the business. Why? Because the person is thinking like a trader and the person is not thinking like a business owner. And there is something called the yellow pad test. So this is how the yellow pad test works. So before you buy any stock, imagine you are buying the entire company. You're not just buying 100 shares from the company. You're not just buying 1,000 shares. You are buying the whole company. What do you do first? You look up the total value of the company. Then you ask important questions like, if I had the money, that's the total market value of this company. If I have the money, would I be comfortable owning this entire business at this price? And would I be happy running this business? Would I feel confident about the future of this business? Would I sleep well at night knowing that the business will go well? Because the truth is that when you buy even one share, like I mentioned before, you are buying a tiny slice of the whole business. So if you would not buy the whole company, then why are you buying a small piece of it? So that simple mental exercise transforms how you pick stocks from gambling into evaluating businesses. So you learn to evaluate businesses. So let's also bring this analogy closer to home. So if you follow the news recently, you must have heard on the news that Tony Elumelu acquired 120.4 million shares at $496 million in Seplat Energy. So now pause for a moment and think. Do you think that he woke up one morning, he opened his app for an example, and he saw the price and said, oh, the price has moved 2% today, let me buy? Of course, that didn't happen. So when someone at that level buy millions of dollars worth of shares, they are not reacting to daily prices. They are evaluating the business model, the long-term energy outlook, the cash flow, the management quality, the industry position, the risks, opportunities. So they are thinking like business owners, not like traders that refreshes apps every 10 minutes. And here's the most important part of this. You don't need millions of dollars to think like that. You don't need millions of dollars to think like Tony Elumelu. Even if you're investing just 1,000 naira, even if you are buying just a few shares, the mindset must be the same. Because investing is not about the size of money, it is about the quality of the thinking. So if you treat 1,000 naira carelessly, you will treat $10 million carelessly. But if you analyze 1,000 naira thoughtfully, you are training your mind to handle bigger capital in the future. So there's a principle I strongly believe that you can tell a person who can handle great wealth by how they handle small income. So if you start thinking like an owner early, when bigger money comes, you'll be able to make good decisions. It will feel natural to you. So smart investors are not built when they become wealthy. They become wealthy because they build right mindset early in their investing career. So whether you are investing 1,000 naira, whether you are investing $10 million, you ask yourself, am I thinking like a business owner? So that question alone will separate you from an ordinary investor or from an emotional investor.